Eric Mwather with Mwather.com. I'd like to do a follow-up on the previous video that we discussed the foot, and as a follow-up to this previous video, which should be number 260 in the series, daily market study, and the FTSE is breaking out, but we did discuss in the previous video a couple of issues that are developing on the chart, and I'd like to discuss those as a follow-up. And you can see a day after the previous video, right now, a couple of things are developing. The breakout attempt above the recent recorded, I guess recent, but actually it's in 2015, that previous weekly closing high, and I believe it's an all-time weekly closing high at 7089.77, as of right now seems to be stalling. So we are looking at a potential here for a failed breakout, which is not a good sign. Now keep in mind also, we are failing to hold that critical RSI level of 69.1. Failure to sustain levels above 69.1 on the weekly RSI suggests the stock is running out of momentum, and potentially the next meaningful direction might be lower. Also take note of what's happening right now on the daily. You can see that we have a couple of things developing here. Number one, we have an improvement in price closing highs, and yet we see that the RSI failed to make a higher high. The RSI also on the daily was rejected when it tried to move above 69.1. That tends to be a red flag. Also, so we got that negative divergence, rejection at 69.1. Take a look at this line here, which goes back to this recent break. So the break right here led to this shallow pullback. So that shallow pullback, and now we are seeing that if we draw a line from here, the market is seemingly forming uniform activity rejection around that red line. That tends to be a reversal. Now we can test that line or the red line level by going backwards in time, and you can see it gives us this nice top during this period here before there was some type of a pullback. So again, we are seeing pullback reasons here, negative divergence, rejection at 69.1, and again this red line, the recent break, is also being tested. Uniform activity rejection on the red line creates a little bit of a problem. Also, if we go back to the long-term monthly chart, don't forget that there are two lines we've been watching here that could present very strong resistance. You got top side resistance on the monthly RSI, and also don't forget we had discussed this idea that we are coming back to test the break that was the major break in late 2007 right there. So the market is doing its best to either confirm resistance or eventually break out above those two lines. Right now it looks like it is resistance, and as long as that is resistance, more than likely the next meaningful direction here looks to be down. Of course, we shall see. Veremos. Eric Mwather with Mwather.com. As always, good luck, peace, and blessings. EACS.